Hey guys, welcome back to the Max Expense Business Podcast. Today, we have a very special guest. But before I jump into that, if you guys like the content I'm putting out, the people I'm interviewing, please like, subscribe, leave a review. It helps out a ton with the podcast and also the people that are coming on the show. If you can, go over to Apple Podcasts and leave a review. That helps out a ton as well. So without further ado, today's guest is Mark Loeffler. Mark is the CEO of Mark Loeffler team and is also a very experienced real estate investor with over 100 units. Guys, I would like this guy is very experienced. He knows what he's talking about. He has a YouTube channel. His name, you just look him up on YouTube, he'll come up. I recommend that you go check him out if you're in the real estate space and you're sort of interested. You want to learn more information, and especially if you're Canadian. I highly recommend Mark. So we'll jump straight into this. It's great to have you on the show, man.
Thanks for having me. It's a pleasure being here.
Awesome. So, I'm really excited for this one. Jump into real estate. I'm pretty interested in the real estate space. So why don't we start for people that have maybe never heard of you before and what you sort of do, to give a little bit more context. Why don't we start sort of from the beginning? Where did you grow up? Where did you go to school? And sort of what was your first passion and how you sort of progressed into real estate?
Sure. Yeah, I grew up in the east end of Toronto, not Scarborough. Like Leslieville, Greenwood, Dundas area, but it wasn't Leslieville back then. I went to public school and, I went to university at Western. I don't know, I was always interested in investing. And then I got interested in real estate investing in my early 20s. Just for the simple fact that you could put little money down and get cash flow from it. And it seemed like a good idea.
Awesome. Yeah. Love it. So jumping into a little bit more detail about that, did you previously have any passions before real estate, or was it always like growing up, were you like always sort of interested with real estate and saying like, hey, I want to start owning properties, or, I want to become a real estate agent? Because like you're a very experienced real estate agent. You have your own team and stuff, and you're like one of the highest producing agents, I believe, in Keller Williams, Realty in Canada. You're very experienced, and the majority, like, when did you actually get into becoming a real estate agent? Was that later on in your years, or was that early on?
Yeah. So I started investing when I was like 24, and then I didn't become a realtor till I was like, I think it's 31-ish, 31. So I was an investor for a good 5-6 years before I ever became a real estate agent.
Okay. And what sort of prompted, like, what were you doing beforehand? Like when you got out of school, like what job were you doing?
So right when I got out of school, I traveled for a year in Australia, and I did everything over there. I was a fixed service consultant for Butterworths. I did crab fishing. I picked mangoes. I picked table grapes. You name it, I did it. Then when I got back, I started working at Canon Canada on their consumable side. So I sold paper and paper accessories like The Office. And after that, I opened up a rent-to-own company, which I was doing full time. I sold that, and that's when I became a real estate agent. And I wrote obviously 2 books on real estate investing in that time as well.
Awesome. So like, I actually find that really interesting. That year you spent in Australia, did you find that like you did a lot of like really interesting stuff, probably had like a blast of a time there. Do you think that taking that 1 year after university really helped you develop as a person, and you sort of experienced the other stuff before you came back and, hopped into like, the 9 to 5 sort of work life?
I mean, definitely. I mean, every one of your experiences defines who you are, right? And helps you become who you, eventually become, right? So,
all right, awesome. So now, okay, so you're working at Canon, and then during that time, you went to buy your first property. What was your first property in Toronto? Were you still living in Toronto at this time?
So I was living in Toronto, Woodbine, Danforth. My first property was actually in Newmarket, Ontario. I bought a duplex, $200,000 up and down duplex, semi-detached, which are selling for $700,000 now. It needed work, but that's exactly what I wanted because, I'd worked for a contractor before. I knew what I was doing. So basically I spent evenings and weekends fixing that up. And I put the sweat equity in.
Awesome. Awesome. So that's actually something really interesting. Like usually when somebody buys their first property, it's not usually a duplex or they do a house hack or, something of that nature. Usually it's like, hey, I'm going to go get like a condo or like, maybe a small townhouse or something. What sort of made you get that duplex? Did you did you read books or did you meet some people that really affected your life? Like how did that sort of happen?
So I mean, I'd read Rich Dad Poor Dad, and then I read Dulf DeVoos, Real Estate Riches, who was the Rich Dad advisor at the time.
Hmm.
And I met a guy who had a bunch of properties in Newmarket, Ontario, and he hooked me up with his realtor. And you know what? Here, the thing is, the numbers worked. The cash flowed really well. Even though, like my first property, I did 5% down. I did 3.5% cash back, and I lived there, right? CMHC financing, but um, it cash flowed. I didn't have to pay anything to live there. So I house hacked before house hacking was cool.
Yeah. Awesome. Awesome. So like when you got that first property, and that sort of like you got your feet wet in the real estate world, like how did you find that, putting all that sweat equity in? Did you like it? Did you not like it? And what did you sort of learn from that first property?
I mean, to be honest with you, I actually do like the sweat equity part. I like doing that type of stuff. But what I found was it was just inefficient, right? You make money putting deals together, not managing or doing the construction work yourself.
Mm-hmm. Yeah, yeah, and that's what I hear a lot. I had a lady on. I don't know if you know her. Her name's Fanny Newport.
No, I don't know her.
Okay. Yeah, she's a Canadian. She's Canadian. She's a real estate investor. She does events and stuff. I don't know if you heard of another guy called Dan Dore.
Nope.
Okay, they're more Ottawa based and stuff. Like Dan Dore runs
Okay.
like a property management company, but also get into like development and other stuff like that. But anyway, Fanny Newport sort of said the same thing. Like when she bought her first property, she did all the renovations herself, right? Doing all the painting. And then she realized very quickly, she's like, this is not how you buy and invest real estate. It just takes so much time. I could have paid somebody, like $1,000 or I don't know, like $500,000 to do the painting. And it would have been done in like half the time. And I could have got somebody in and could have got it rented and like cash flowing. But yeah.
Yeah. And better quality. And in that time, you could be renting it. You could be finding other deals. I mean, now you could just be sitting on a beach somewhere, right? Like it's all about leverage, right? You can't build a big business if you're going to do everything yourself.
Yeah, 100%. So you're still working at Canning. You got your first property, a duplex. You house hacked that before house hacking was actually a thing, which I love. And then what happened from there? Like, did you get your real estate license? Did you buy another property first? Like, what sort of progressed from there?
No, so I went and I bought another duplex in Newmarket. And then next I bought a duplex in Toronto, which again, because I was tired of traveling from Newmarket. I wanted to live in Toronto again. And that was in the Junction. And around that time, I actually quit my full-time job and I was doing a lot of rent to owns. And we basically had a rent to own business where we'd find the tenants and we'd, wholesale the deal out or JV the deal. And I had a couple of partners in that business. And we were doing anywhere from 6 to 10 a month deals. So like we had a lot of deal flow and, we were making some decent money doing that. And yeah, so I quit to run that full time and I've never had a full-time job since.
Awesome. So how old were you when you sort of became your own sort of boss?
Probably around 25.
25. Wow. Yeah.
25, 26.
Yeah. Like that. That's very impressive. So talking a little bit more in detail about that business. So what, like a rent to owns, for people that maybe never heard these terms, doing these rent to homes, doing wholesaling, doing the JVs, all that type of stuff. Can you sort of explain that in a little bit more detail, exactly like what it was like that you were doing and, how are you actually structuring it and doing it?
Sure. I mean, so if you're interested in rent to own, you can pick up a copy of my book. I think it's still on Amazon from like whatever, 12, 13 years ago, or even longer now. It's investing in rent to own properties, a complete Canadian guide. Yeah, but a rent to own is simply a lease with an option to purchase. And so what we did a tenant first rent to own or lease to own, and we would go find people who wanted to buy properties, and we would qualify them, make sure they were good, and then we would send them out to work with a real estate agent to go buy a home.
Okay. Okay. Awesome. Awesome. And then from like, do you still run that business right now, or did you sell that, or did you sort of like, sell that off and?
So I sold that to one of my partners before I became a real estate agent.
Mhm.
They're still running homeowner soon. I believe it's still running out there. Yeah. And then all we would do is we would basically put the deal together and sell it to an investor, wholesale it to an investor as a complete package. And or we would joint venture where we would bring in a money partner and we would run the whole deal and manage and do everything for them. And
Okay.
obviously those deals were really good because we were cash flowing probably $800 to $1,500 a month on those deals.
Wow. Wow. Yeah.
And we
That's.
had no work, right? Because we had an owner, not a tenant.
Okay. Okay. Yeah. Yeah. That's very smart. So then making that transition to becoming a real estate agent, I'll probably say during the same time that you were running the rent to own business, were you still buying properties at that time, or did you sort of take a break to sort of focus on the rent to own
No,
business?
I mean, I was still buying properties. I bought a whole bunch of properties out in Cornwall, Ontario. I started looking out in Hamilton, Ontario. I bought a couple more in Toronto at the same time too. So I was still buying stuff for sure.
Okay. Okay. Awesome. Yeah. I was just thinking like I don't know if you're still holding those properties in Toronto, but if the probably back then to probably now, you've probably done pretty well on those, like the depreciation, because the market's absolutely like, we'll get into this more detail talking about it, but it's absolutely insane right now.
Yeah, it's pretty silly right now.
Okay. So then what made you want to jump into, going into the real estate route and becoming a real estate agent?
Yeah. So once I got bought out of the company, homeowner soon, I mean, I just written a book on rent to own. So I was teaching a course on it and I was showing people how to do it. And basically, well, a couple things happened where I had a lot of these real estate investors who were doing this. And number two is I was still advertising for rent to own tenants. I was still getting them. And I was basically giving these deals to realtors. They were making $7,000, $8,000, $9,000 on these deals, and they'd show 3 houses, and I was making $5,000 on the deal. And like, they can't give me a commission or a referral. So I said, you know what, I'll just become a real estate agent. And then either I can still like refer the deals out and make a referral fee, or I can just do the deals myself and basically more than double my income without any extra work other than showing some homes.
Okay. So you're like, it's way smarter to do it this way and just have that license where you can get those referrals and actually be able to sell it and take a commission, right?
Yeah.
So
And then it kind of snowballed because my first year I did like 54 deals.
holy crap. That is absolutely like, what was that the record for your office at all?
I don't know. I've never looked. I joined like right at home, right off the beginning, where like they leave you alone, I leave them alone. I know that if I was in Keller Williams, I probably would have been like either rookie of the year for the whole franchise or very close to it at that time. But who knows?
Yeah, no, because like that's absolutely insane. Because the majority of people, like, doing in your first year, if you do 12 properties, like let's say 12, like sell 12 houses or work the buyer side, like not rentals and stuff. But like that's still pretty impressive in like a large market. Like if you're in Ottawa or Toronto, like you're making like a pretty good commission on that. Doing 54 is
You
absolutely
gotta remember prices were a lot lower then. So
yeah, true, but still doing that deal volume is pretty intense. So yeah, talking about that actually, how did you actually do that? How did you grow so fast in the first year and have like, I guess it's a little bit reminiscence of your previous company, right?
remnants of the previous company, I'd written the book. I was out networking 4 or 5 times a week. And that's how I grew it. Like networking was my thing. That's what I always did. And you know what? Once you work with an investor and you do a good job for them and you make them money, they refer you to other investors. It's a really small world out there, right?
Okay.
So once you do a good job for one, you have 4 of them.
Yeah. That word of mouth is so strong, right? So like in today's age where networking's, some could say harder, but at the same time
Different.
easier. Uh, how would you be like, how would you approach the situation if you were just getting into real estate right now and you didn't have like, the experience of like the business you were running previously?
Yeah, to be honest with you, it's Facebook groups now, I think, right? Or Reddit or something like that. I think that's the new kind of way to go. And you're just, I mean, you're not promoting, like you promote yourselves, but you're just in there helping people. And when you're in there helping people, people will be like, well, like, yeah, you know what you're doing. Can you help me? Sure.
Mhm. Yeah, 100%.
So
So really, yeah, we're working around in those rooms, right, and just helping people. So you did 54 years. You got off to like a rock star year. Like you must have had a big chunk of commission with that. What did you do with that? Like, did you sort of cut your expenses? Did you spend a lot of it, or did you like invest most of it?
I invested most of it. It's funny though, like I was doing, um, I don't know if it was what year it was, how many years I'd been in real estate, but I was driving this like crappy 97 Honda Civic, because my Golf that I'd bought in just after university had died, or in university had died. And, it was like 11 years old. Somebody had smashed into the door. I just didn't care. Right. And I worked with a very wealthy individual and he goes, Mark, I love it. I go, what do you mean? He goes, well, look at your car. He's like, I know you can afford more. So, he goes, I appreciate that. I'm like, okay, whatever. I mean, I like cars. Like, I mean, I own a Porsche now, and I love driving it, but it's a kind of like, okay, it's a thing. If I didn't have it, I'd be fine too. Right. It's not like,
Yeah.
yeah. So, like, I'm a collector of houses. I just like to collect properties and just keep collecting properties. And,
Mhm.
you know, I have a hard time taking money out of investments to go buy things.
Awesome. Well, yeah, well, that's not a bad problem to have, right? Is like having that discipline to be able to like, you get a large check and instead of being like, oh, I'm going to go spend it on this, I'm just going to, invest all of it and just continue to build my portfolio. Right. And like that guy was saying, like, I absolutely love that as well, is right. Like like you're probably making considerable money and you're just like, I I don't really mind. It is what it is. I'm just going to
I,
continue to build my portfolio.
I mean, let's be honest. It was a fun little car, manual, front wheel drive. It drove like a go-kart.
Awesome. So after your first year in real estate, how many properties did you have then? Like, did you start venturing into larger properties or commercial properties, or were you still buying the duplexes, triplexes, and single family homes?
Yeah, I mean, I was buying 2 to 4 units, mainly 3, 4 unit properties. I bought, so I would buy horrible stuff like crack houses, fire damaged, hoarder houses, basically anything my clients didn't want to buy, I bought. Like I bought leaning houses. I mean, you name it, I bought it, right? So a lot of the times the bank wouldn't finance. They'd walk up to the front and say, "No, we're not financing this." I'm like, "I haven't been inside." They're like, we don't need to. Like bed bugs, like it was just normal, right? And my clients were scared, and I just make a lot of money off it. I was fine. Um, so I bought a lot of those, and I was BRRRing back then, right? I'd buy it, I'd fix it up, and I'd refinance it in a year. I wasn't trying to do it in 6 months like people are doing now, but it was a lot. For me, it was simpler because I wasn't changing zoning, I wasn't changing units, I was just fixing it up, right? I was getting typically bad tenants out, and just cleaning it up and re-renting it for obviously market rent. Um, so I did that for a while, and I got into some private lending. I bought an 18 unit vacant property. I did that. Bought a 19 unit crack infested property. Yeah, and then I've just continued to buy multifamily properties since then. And I've never really got into the commercial aspect. I've always looked at it, and I mean, I like value add. So if I could find value add, but the problem is I'm just so good at buying multifamily properties and doing that value add that it's hard to go. Now I'd have to go learn that,
Yeah.
which I might do at some point if the right opportunity came, but it just hasn't come yet.
Yeah, no, 100%. Like, you've already sort of built this wheel that's spinning so well that, to go off and build a new wheel and trying to make that spin really well is going to take a lot more effort. And with multifamily, like there's like, billion-dollar real estate investment firms that all they do is just multifamily. Right. So it's like you're able to build a considerable business just in that one asset class.
Well, I mean, there's multi-billion-dollar investment companies that invest in everything, industrial, strip malls, whatever it is. Like there's a lot of money chasing real estate right now.
Yeah.
So,
Yeah, 100%. One thing I do love is that you're just like, you're the type of guy that you just see this property and it's just like, oh, it's like a 19 unit property and it's just completely like destroyed and you're just like, great. you're like this is going to be great for a value add. And where majority of people see that property and they're like, oh, like that seems like a whole bunch of headaches, and you're just like, no, I'm going to take this on and I'm going to crush it and like do like the BRRRR strategy. So going into a little bit more detail about that, like what have you learned with, like doing the smaller properties, doing these larger properties, on the financing side? Like you must have had like lenders are probably just like you're saying, like they say, and they're just like, no. So how did you sort of work around that?
So on the multifamily side, when I buy the bad properties that need a lot of work, which to be honest with you, I haven't done for a while. I've typically bought nicer buildings for the last 5 years. But when I was buying the crappier buildings, I was using a credit union. And they typically give me 65% of the first mortgage or the purchase price, and they give me 100% 75% of the construction finance. And then we just refinance with either CMHC or BMO or RBC, whoever is giving us the best deal at that time.
Oh, okay. Yeah, that's super interesting. And for the construction money, like, did they give you that money up front, or did you have to, do the 50% sort of thing where you have to have your own money and do the 50% and then they give you the X?
No, they do draws, and you can basically say, okay, we're going to do 4 draws total. So if it's $1 million, we're going to do $250,000 each, or whatever that is. The less draws you do, the less costly it is, because it costs you every time you do a draw. You got to get the appraiser out. You got to do this. You got to do that. So it's a couple $100. So typically the bigger draw you can do, but if you only have a couple $100,000 to play with, then you're going to use that, get the guy in, get more money, continue on. And as every step of the way, they're just funding it, but afterwards, right? So you got to put the money up, then you get the money.
Okay. Yeah. And that's like for my own personal world, like I'm sort of looking at trying to, get like my first property this year, and like with a buddy of mine, buying like a duplex or triplex, and we have enough money to buy the property. It's just coming down with the renovation costs to do that renovation in that first year, right? And I was like trying to figure out like how can we work around, like, because I was talking to a few different mortgage brokers about it, and they're like, no, like nobody's going to give you that money until you've like already done some of the renovations and they can see it, just because and I don't know if you sort of found a way around this, because I would love to hear about how you did it.
Well, I mean, so there's definitely creative ways to do it. Like you could buy the property and then go get an RSP second mortgage from somebody, or just a private second. You can do a purchase plus improvement depending on how much renovations you're going to be doing. I mean, there's tons of ways to structure a deal. If it's a good deal, it's a good deal. If you have to pay extra points, you pay extra points, right?
Okay. Yeah. So it just comes down to like the sort of like the numbers of it, right? If it works, then it works, right?
That's right.
So, expanding from that, like, if you're looking back on what the buildings you bought, like, would you have done sort of the same sort of route of, buying the duplexes and like the rundown buildings, or would you have switched up your tactics a bit?
I mean, yeah, like back then you could buy 2 to 4 unit properties that just needed to be prettied up and, sometimes structurally fixed, but whatever. Like, and to be honest with you, 2 to 4 units maximizes your value, your return 100%. The only reason to get into bigger stuff is, from my point of view, is because you have too much capital to work with, and it's inefficient to be doing 2 to 4 units all the time. It's a lot of work, right?
Yeah.
I mean, I don't know if you know Mandy Branham, but she does it great. Like she's doing, I don't know, 5 or 10 of these a month still, and she just like rips them off. but she's built a business and system around it that I just never wanted to do. For me, it's easier to buy 120 units than buy 10 duplexes.
Yeah, 100%. So, talking about that, getting into those bigger levels, I guess that's just, over time with experience and stuff that you eventually, that's the trajectory that you just sort of go with, you building up, and it just gets easier. Right.
Well, I guess it depends on your end goal, right? Like if your goal is to own 10 properties, the cash flow enough that you don't ever have to work again, well, then maybe it's not, right? I mean, I don't know if you've watched Kellen James on my show. I mean, he had, I don't know, 6 or 8 properties and he retired, right? Because he had enough cash flow. Now he's starting to see with the boom a little bit. He's bought a couple bigger buildings, 8 units. But again, it's going to be for cash flow for him so he can live.
Yeah. Okay, awesome. And now talking about the boom right now that pretty much everybody's seen in sort of Canada. Like I've a family member in the UK, and it's crazy because it's the exact same thing in the UK right now. And like she owns a couple properties, and everything right now is just like flying off the market in the UK. And it's like same thing that's happening in Canada, and then also like in some states of the US, it's the exact same thing, which is like really crazy and really interesting. Of like we're all in like a huge pandemic right now, and everybody's buying houses. And why do you think that sort of is that, the housing market's gone up like crazy while we're in a pandemic and people are losing jobs?
Well, because I mean, interest rates are at historic lows. It's free money driving the economy, right? Like they're pumping out money like you wouldn't believe, which obviously inflates the stock market, inflates the housing prices. And people don't look at housing prices; they look at how much it's going to cost them per month. You, as an investor, you don't care if it's $800,000. You get a 5-year loan on it, and you're still going to make $500 a month cash flow with the current rents, right? You don't care that it costs you $800,000. You care if you're going to make $500 a month cash flow.
Yeah. Okay. Okay. Yeah. So the rents are matching pretty much the pricing right now. And what were you going to say?
Depends. It depends, right? I mean, yeah. I mean, yes and no. I mean, rents always lag pricing.
Okay. And so where do you sort of see it? And I saw on like one of your on your YouTube channels, some of your most popular videos right now are talking about the market crash. Well, not the market crash, but is there going to be a market crash in Canada right now because housing prices are going up so much? So what are your sort of thoughts around that?
I mean, don't hold me to anything, but to be honest with you, I think we're going to level off. Bank of Canada said yesterday that they're going to start raising the prime rate next year for second quarter. I think we're going to see inflation that's higher than normal, and that's bad for interest rates. So interest rates will rise, therefore it's going to cost people more to buy their properties. So if obviously incomes don't go up to match, then I think we're going to see a bit of a leveling off.
Oh, okay. And with that, do you think, do you think it's gonna go down a bit, and you think like people are gonna start selling because the interest, because everybody right now is saying like, oh, I'm able to buy this house, and they overextend, because interest rates are so low, and then it goes up, 1 or 2 points, and then they're sort of screwed, and they're having to worst case scenario.
Here's the thing about it, right? Is there's not a demand issue in Canada, it's a supply issue. So with the supply issue, with the demand, they try to curb demand by putting stress tests on, by government regulations, that type of thing, make it harder for people to buy. And then in the federal government or in the federal budget, they say, oh, we want to help first-time home buyers. And we're like, well, okay, great. That's going to cause more demand. And anyways, undo what you did on the other side. But yeah, I mean, so will we see a crash? Here's again, the problem is that we're landlocked, right? We've made this artificial green belt, which good or bad. I'm not here to say that. Like, I think we need to protect farmland and land in general. I agree. And so we're going to densify. Well, to get a condo project through takes probably 3 to 5 years, or to get anything done takes a couple years. Like I'm trying to build my cottage up in Northern Ontario, and it's probably going to be 1.5 to 2 years just to get building permits, just because it's stupid. You got to go through so much regulation, right? So that's Ontario. I mean, it's a bit better out west, but it's not great. So,
Yeah.
and obviously Ontario is the most populist province, and we're going to continue to grow. People have to go somewhere. Like, so back in 2015, I had a good friend who's a CMHC economist. And I said to him, I said, well, should I sell my property in Toronto? Back then it was probably worth $800,000 or $900,000. And he goes, here's what I can tell you is that in the next 5 years, 1 million people will move, or next 10 years, 1 million people will move into Toronto. Where are they going to live?
Yeah.
Right. 100,000 people a year are moving there.
Yeah. Okay. And with the slow rates of development and new builds that are happening, there's just nowhere to go. So it's just pushing prices up like insane.
Prices up, rents are going to go up.
Okay. Was this you? I don't know if it was it might have been one of your posts or something. I just saw something. It was somebody talking about the comparing like our time for getting permits and stuff for properties compared to other countries, and how fast other countries you're able to get permits for building and stuff like that. Was that one of your posts?
No, it wasn't one of mine, but that's a good one. I should talk about that.
Yeah, no, 100%. Oh man, I was just thinking because you brought that up, and they were talking about like in like South Korea, like the times, like it's I don't know, it's like 28 days or months to get a permit. It's like super quick.
Wow.
In other countries,
to be honest with you, it's supposed to be two weeks here too.
Yeah, but it
like
takes
that's their stated mandate here is 2 weeks. But I mean, when I got my third floor addition on a property I did in Toronto, this was, I don't know, 10, 11 years ago. It was simple. It had no I didn't need anything done. And it was, I don't know, 6 to 7 weeks.
Wow.
And I thought that was actually not bad.
Yeah.
But I got guys who are splitting lots, like, and it's taking them a year to do it, right? They have extra land, everything meets whatever zoning and everything. Mm-hmm. And they're taking one and putting 3 houses on, right? And that's densification as well, not just building towers, but mm-hmm. just, on one 50-foot lot, building 2 25-foot homes, right? Mm-hmm. But it's taking them forever to get that through.
Yeah, that's absolutely insane. Maybe that's another business, like something that you could start is making that process, a lot faster, right? Is like taking a year for that. Like that seems insane just to like that's really going to mess up
the business of bribing city councilors. Is that what you're proposing?
Well, I
staff. I mean,
not like that, but I mean, like maybe with technology or something, you can make the process a lot faster. Cause like that seems insane for, trying to build 3 houses.
I mean,
just getting the permit.
You say that here, but then you go to Edmonton and, it's the Wild West, right? Like you can get everything approved really, really quick.
Oh, wow.
So, I mean, different provinces, different ways of doing business.
Yeah. 100%. So now going back into, so the investing side, like I know you have tons and tons of knowledge, and what would be your advice to somebody that's, let's say, in high school or in university and they're listening to this podcast? That's the majority of my demographic, and they want to get in real estate. What would you recommend for like that they want to start, go down the same route as you, buying single family homes and build up a portfolio, on the residential side, and then getting into multifamily? What would your recommendation be to them?
Yeah. So number one thing is to go watch the Mark Loeffler Experience every episode. Then the second thing I would do is I would read something like Adult Roos Real Estate Riches, Rich Dad, Poor Dad, Richest Man in Babylon. But like just from a strictly real estate point of view, I would tell them to go find a duplex, 5% down, 3.5% cash back, borrow the money from mom and dad. You can gift that. And you know what? Again, you're in university. So if you're in a 2-bedroom basement apartment, you live in one room, rent out the room to your buddy, and then rent upstairs to whoever. Right. Mm-hmm. And then, you know what, if you can do it again the next year, go ahead and do it again the next year and just keep doing it. And then if you, at the end of 4 years, you would have 4 properties.
Okay. Yeah. Yeah, 100%. Like that's some great advice. And yeah, like so like the thing I sort of see that's super interesting is, a lot of people get stuck in, an analysis paralysis or something like that, where they start learning, and they don't pull the trigger because it's like, you're buying like a $200,000 or $300,000 property. Did you ever have any of those? Like, I mean, like when you're buying like 120, did you ever have any of those inclinations, or were you just like gung ho, just like let's start rocking and rolling and get this done?
So when I first started doing it, I didn't know enough to have analysis paralysis. So it just like, this looks like it works. Let's just put an offer and let's just do it. Um, like lately, maybe I've gotten analysis paralysis because, it's like one of those, is it okay? Is it a good deal? And to be honest with you, and this is been my mantra for the last 5 years. Yeah, I know I'm going to overpay today, and in 5 years, I'm going to look like a genius. So,
Mhm.
I was actually just reminded that from my buddy Josh Doyle today, and it's like, yeah, I know I should have bought 3 other buildings right by now, right? And I had them, and I just delayed and whatever, didn't move quick enough.
Yeah. Yeah. And that's what I think that happens a bit when you see the market spike how it is. You're like, oh, it's like you're so used to like the previous amounts that you used to pay for it. And then it spikes so fast and you're just like, this is too crazy to pay for this. But then, like you're saying, in 5, 6 years, it's going to be justified.
Well, you're buying opportunity, right? Especially now, you're buying opportunity for what it can be and what the rents can be. And
Mhm.
like, and if you believe the rents are going to be higher in 5 years than they are today, then it's worthwhile to buy.
Mhm, mhm. So, actually talking about like, I've sort of like, from what we talked about so far, it sounds like you've had like a really good deal flow from like, starting the rent to own to then getting into real estate and, building your business. How have you built such a great deal flow of, these properties coming in, or like, finding these great, value add opportunities?
I just, everyone knows I'm a closer. If I say yes, I close.
Ah, okay. So
So
it's
when people know that you're a closer and you're not out there saying, okay, locking up a deal and trying to wholesale it or whatever, then people want to work with you. They want to bring you the deal because especially in multifamily, like sometimes it's painful dealing with agents who don't know what they're doing or buyers who don't know what they're doing. Because who wants to lock up a property for a month and a half? And, at the end of the day, then, the deal falls through and you've lost all that time.
yeah, yeah,
Right.
100%.
Whereas you deal with someone like myself, here's my offer. I'm good. You like it. We agree. I'm going to close.
Ah, okay. So your main value add was like, hey, if I'm looking at your property and I say, yeah, I'm going to buy it, and it's going to go through. So like, investors that were looking to sell property be like, okay, hey, like go show this to Mark, or a real estate agent would be like, go show this to.
Investors, realtors. I mean, realtors want, not that they don't want to do a lot of work, but they want to do the least work possible. I mean, it's not like I'm underpaying for these properties by a lot, right? I might not be paying like what some newbie that you have to go through 4 or 5 buyers to find is willing to pay, but we could do the deal right now. Yes, it can be closed in 2 months, and we can just be done, right?
Mhm. Ah, okay. And I guess that's super useful in the negotiation part as well, right? Like you're like, hey, like, and instead of being like, like we can close today, or you guys can continue looking for the next like couple months, and you might find a buyer, you might find somebody, and it might fall through. But today we can close, and this can be done in like 2 months, which is probably something really attractive to sellers.
Yeah. Well, I mean, if they've decided to sell, they don't want to hold on, right?
Yeah, 100%.
Unless they're just fishing, which
Ah,
is
okay.
fine too.
So now talking, I know we're coming to close to the end of the podcast here. Talking about YouTube, and you've actually had some pretty good growth in the last, I believe it's a year now, or a little bit over a year. You've been on YouTube.
Yep.
How have you sort of done? How have you sort of done that growth? To give advice to somebody that wanted to start a YouTube channel.
Yeah. So super consistent. I did 3 a week for the whole year. Um, I kind of analyzed what did well, what didn't. Um, I invested money into, working with people to like do thumbnails. And here's the thing: if you don't make it clickbait, people won't click.
Yeah.
It's sad, like you can have the best content in the world, but if nobody clicks on it, nobody cares.
Yeah.
Right. So like, that's why, like you say, the stock market crashing one, which if we don't make it stock market crashing, nobody watches my market updates.
Yeah. Yeah. 100%.
Right.
I actually, sorry, what were you going to say?
But I was just going to go back. Super consistency is the key, right? Mm-hmm. Consistency. And if your goal is to grow that channel, then delivering what your audience wants and what will get picked up and other people want to see.
Okay. Yeah. 100%. One thing that I saw was really interesting from an experienced YouTuber is how he pretty much creates his videos. Is he thinks of the thumbnail first and then the title of the video, and then builds his whole video around that. So like if because he like you're saying, right? He says, if I don't have like a really good thumbnail and a really good title, he says people aren't going to click on it. It doesn't even matter what content you put it out there. If people aren't clicking on it, then it doesn't matter. Like you could be doing whatever you want.
Is that Mr. Beast?
I don't know if it's Mr. I think it might be from Colin and this Colin and Samir podcast or something.
Okay, because Daryl Eves talks about that a lot too.
Okay.
If you don't know him, follow Daryl Eves. He wrote the YouTube formula. So.
Okay. Yeah, 100%. Yeah, because that's something that I noticed with your YouTube channel is like you have really good thumbnails. You have catchy thumbnails. They're sort of consistent with like your face and sort of like getting like getting a reaction or emotion, right? When you click on it, it says, okay, this seems interesting. And then also with your titles as well, right? They're interesting and they draw you in. It's not just like some vague title or something like that. But now, yeah, so we're coming to the end here. Is there any other advice or anything else that you want to say or, talk about to like, people in their 20s or, like the next generation of like, business owners and like real estate investors?
Yeah. I mean, best time to buy real estate was 50 years ago. Second best time is today. Don't worry about the prices. Go in, first time home. Well, not first time. It doesn't matter, but use CMHC or Genworth, or if you're in the States, FHA, get into a home, rent out. If you buy a 5-bedroom home, rent out 4, rent out 5 and live on the couch, right? Just keep your expenses super low, buy assets and keep going.
Awesome. Well, love it, Mark. Yeah, so we're at the end here. Thank you again, Mark, for coming on the show. It's been an absolute pleasure, listening to you and hearing you give advice, on real estate, on being a real estate agent, on YouTube, all that type of good stuff. Where can people find out more about you? Your books, your YouTube channel, all that type of stuff.
Yeah. So if you go onto YouTube, the Mark Loeffler Experience, just look up Mark Loeffler. I'll be there. Instagram is Living the Dream 40. The books, you can just look up Mark Loeffler on Amazon and you can find them there.
Awesome. Well, thank you again for coming on the show.
All right. My pleasure.